What a week last week. Apparently, the topic last week was urgency hits the Des Moines real estate market, and that was popular because it had over double the views this past week than I normally get. So, thank you for everybody that watched the show, shared the show. I know there's been a lot of conversations on that, I just let me know anytime you see something out there that you'd like me to cover, market stat wise, and I will do my very best. In the meantime. Let's get started this week, and we're going to talk this week about the three key factors that affect the real estate market. So let's get started. Hey there, welcome to the show. It's Les Solgrove. This is Simply Des Moines Market Values, week 37 of the year. We got about 15 weeks left for 2024, and boy, it seems like it's going fast. But this week's topic, we're going to talk about the three biggest factors driving the real estate market. And those three factors are inventory, prices, and interest rates. Now, you notice I didn't put in there one of the key factors. It wasn't affordability. I think affordability is a side product based on these. So let's kind of jump in here a little bit. We're going to look at some graphics this week from the Fannie Mae National Housing Survey report. This is as of August. The report came out just last week. And so I thought I would incorporate that into this week's show and kind of into the topic for this week. And the first thing you'll notice here, this is the home purchase sentiment. Now, this report is conducted by over 1,000 household financial decision makers. Fannie Mae does this survey every single month. And they basically ask questions in six different categories. That's buying, selling, home pricing, mortgage interest rates, job confidence, and household income confidence. In other words, you feel like you're going to, how stable is your job and is your income steady, et cetera. The full report is available right down here on this URL. This URL will be in the show notes as well and in the social media postings. Please download this report. I think it's very, very interesting. And I pull from it every month to kind of get a gauge of how we're doing compared to the rest of the nation here. So the first thing you're going to notice here on this sentiment index is that we're at a 72.1. And what does that number mean? Well, it takes all of those six categories. It takes all the questions asked. There's multiple questions in each of those categories. And it calculates a confidence level where 100 is the highest percentage, where 100 would be the most confident or the highest purchase sentiment of the index. And we're at 72.1, which, is not bad in an economy where we've been kind of struggling a little bit with mortgage rates. But do notice that last year we were 4 or 5 points below this year's numbers. So there's a general feeling that maybe things are recovering a little bit, and with mortgage interest rates now, obviously the economy is tough right now, and rates have come down since December. So other portions of this report, and we're just going to hit just a few of these before we jump into how this all looks locally here. These over 1,000 household decision makers were asked if you were going to be selling a home, is this a good time or a bad time to sell? And overwhelmingly, 2/3 of the people surveyed, and this is pretty consistent over the last 18 months or so. I was able to start collecting this information from May of 2023. Predominantly 65% say it's a good time to sell, which is not uncommon. I mean, you think about it, the last 18 months, we've had higher pricing. We've had, coming off of COVID years, it's been a seller's market for forever, it feels like. And so this is not a surprise. This one is 65% finding that this is a good or bad time to sell. They say it's a good time to sell, that's 65%. However, when you flip the coin and you ask that same question to home buyers, is it a good buying time to buy being a home buyer? You can see that it's all the way down into that 17% this past month versus 83. So less than 2 out of 10 people asked this question have said it is not a good time to buy for 8 out of 10 of those people. Again, a lot of this has a lot to do with the economy. It has a lot to do with the rising prices, the high mortgage interest rates. So from a buying perspective, there's no wonder that maybe we continue to increase our inventory levels when we have such a low confidence of whether or not this is a good time to buy. Again, do download this report from Fannie Mae. It goes into greater detail, and I think it's really a fantastic report. Question they also asked is the about home pricing, which is going to kind of go into detail with our local stuff here. They asked these people surveyed, do you feel as though home prices are going to go up, go down, or stay the same? And you can see that the go up and stay the same are exactly the same percentage. 37% responded they felt like home values or home prices are going to either pretty much stay the same or go up about 37%. 25% of them responding did state that they felt as though that the home prices would start to come down, and we're going to start to see that a little bit. I think maybe not so much in the sale prices right now, but we'll look at that locally as well. So we'll come back to these. Just kind of remember these numbers here, and we'll come back to those. So answering the same question about renters, I don't do a lot with rentals on here, but in this particular survey, they also asked renters who feel that the price of rent prices will rise, remain, or stay the same. Overwhelmingly, 61% feel as though rent prices are going to continue to rise, although that's down just a little bit from last month, but it's still all been pretty much between that 60 and 70%. So pretty strong feelings that everybody still feels like rent prices are going to continue to rise. As far as only 11% felt like rent prices would begin to fall. I don't know who those 11% are, but I tend to be up in that in that green line at 61% myself. As far as mortgage rates, again, this is something that we'll talk about in depth in the local portion of the show. 26%, almost 1 in 4 home buyers or home households surveyed are feeling as though that mortgage rates are going to continue to rise. Now, again, this is coming off of a pretty steady last 2 months of interest rates dropping. And you can kind of see that sentiment is going down a little bit. It's dropping a little bit. It was as high in June as almost 35%, and last year it was until October, November, it was in that 45 and up percent range there. So there's a lot of, I think, a little bit more confidence in the mortgage rate information that's coming down the road. 35% feel as though maybe the mortgage rates are going to flatten out and stay the same. I'm kind of in that category. I feel like, we're going to see some ups and downs, but we have kind of settled in here these last couple of months. Although I would certainly welcome and encourage interest rates to come down. But when you look at the ones that are kind of following the market out there and are asking the same question, 39% this month stated that they felt as though the mortgage rate outlook is going to continue to go down. And again, that's a pretty good percentage from July when it was about 30%. So almost a full 10% increase in that confidence that rates will go down. And I think that's going to go a long way as we move into the last quarter of this year. If home buyers and people out there are feeling as though mortgage rates are coming down, that's going to be a good omen for the rest of the year, as long as home buyers don't just now finally sit on the line going, well, they're coming down, so I'm going to wait till they bottom out. You can't do that. You need to act when you feel as though it's the good timing here. So this is just that same graphic there. The spaghetti lines overlapped of each other, so you can kind of see how the end of last year things kind of got close to the same, about 33, 34, 35%. And then again, as interest rates rose, as we started to rise at the end of last year, the sentiment again was, believe it or not, still pretty steady there, that green line. So anyway, that's the reporting there. So whoops, excuse me, I just dropped something. So that is the national portion of the show. Let's now kind of look at this information, and we're going to look at inventory first, pricing second, and then end the show with interest rates third. And so let's jump in here. So here we go. The good old faithful here. All homes for sale. You can see that our inventory levels here moving through the course of the year versus last year. We are still ahead of last year's inventory levels and continuing to spread that gap a little bit. We're currently setting, if you look at this from a uh, longer outlook from 2009 to present, kind of gives you an idea here. There's where COVID hit. We were actually on the direction of actually increasing our inventory just prior to COVID. And at that point, then COVID hit. And of course, this is the COVID years right here. But we're currently sitting at 3,789 homes for sale. And if you draw a line straight across, the last time we were kind of approaching that number for a high was back in 2017, where we had 3,732 homes on the market. Um, and the reason why I'm comparing all the way back to there is because I'm trying to gauge, how far are we out of, or are we basically back from COVID levels? So you kind of go backwards and you look. Obviously, this is going to be the high. We'll see that one in a second. Let's look at 2018. We were at 4,019 listings at the height that year. And we're not quite there yet this year, 3,789. But in 2019, at the height of just prior to COVID going on, we were at 4,262 homes for sale. That was the peak. And just because you see this little drop off, this is the normal downturn we typically see at the near the end of a year. We see this kind of drop around mid-year, and then bottom out around the 1st of January and then go back up again. So what this really means is we're currently about 473 homes away from hitting the pre-COVID high count in 2019, and 473 houses. You think that's a lot of houses there to be added to the market to be able to hit that. But I think there's a pathway there for that to happen. I looked back, I said, how long has it taken us in the past this year to grow inventory by 473 houses or homes on the market? And it's taken us 13 weeks since June 16th till today. We have increased our inventory. Now, this doesn't mean that we've added just only 473 homes to the market as all. This means that between the number of homes added each week and then the number of homes that go under contract, that we're selling fewer homes that actually come on the market. So it's actually slowly building our inventory. So yeah, you'll see in a second here, we increase our home inventory by 200 or 300 houses each week, but also a couple hundred of those tend to go under contract every week. So um, with that in mind, we have 15 weeks left in 2024. Now, remember I said that we typically see this downturn, and if we were in a normal market, that downturn would have occurred right about here. I don't know if you can see that. Right about here is where that peak would have happened. And what's really happening this year instead is that our inventory is continuing to grow. Our net inventory is continuing to grow, and that's again based on the fact that pending sales are a little bit slower than previous years. Plus, some more homes are coming back on the market, which we talked about last week. Um, so, is it possible that we can pass the 2019 pre-COVID listing counts? It's entirely possible, but it's going to require that in the next 15 weeks that our inventory levels continue to to go at a little different pace, and we don't see this drop off of inventory. So, if more homes stay on the market as we get close to the end of the year, I think it's possible. So here's that number I was talking about, all homes listed by week. So if we had 473 that we needed to get, we brought 355 on this week. But again, as you all remember, we do typically end up selling the majority of those, or the majority of those homes close to that number in a week's period as well. So that's why we tend to see that. And I do look here, we have outpaced, again, with the exception of 2 or 3 weeks here, 4 or 5 weeks probably, we continue to outpace last year's inventory levels. And next week looks like that was, for some reason, was a drop off week of last year. I think we're going to continue to see our inventory levels continue to rise. And if pending sales kind of slow down a little bit, we'll continue to maybe see that those levels rise. But there are other factors that are going to affect whether the home buyers are going to start to buy out there. We'll talk about those in just a second here. So, uh, The next category here of our three biggest factors is pricing. So let's take a look at where we are with pricing. And we're going to look at median price, price at sale pending, which is not the sale pending price. That's just the price that the home was at when it went under contract, and then sold prices. And you'll notice right here that we have been, our median list price, while it's been below last year's numbers for the most part, the last 3 or 4 weeks, we've been pretty much right on track with last year's. And we all know that at $364,900, it's not necessarily what the homes are listed for, it's what they are, the price points that they're selling and then actually close at. So this is our highest price point in the three different categories, active, pendings, and sold, which just means we have more higher priced homes out there on the market. A lot of those are new construction, and some more are also the upper end price points. But we typically see the pricing of the homes for sale tend to drop off as we get into close to the fourth quarter. And then as we get into the last final 2 months, we see it pretty well flatten out where we were down there around that 350,000 price point at the end of the year last year. So how does this look compared to the all homes at the median pen price? Again, this is not the price that they went under contract with. This is the price at which the homes were listed at, and this does not include the negotiation factor or where they actually finally close, but it just gives you an idea of the price points of homes that are selling, and the median price of homes that are selling is right in that 310 to 315 price point, which we've been about 315 for the last 8 or 12 weeks here, which is, pretty steady. And again, that's above last year's numbers where we were closer to that $300,000 price point. Now, if we look at the closed sales, again, look right here, you got 364.9 down to 315, and our closed sale price is down to 285. So this is really where the rubber hits the road. Up until the last couple of weeks, we have been outpacing last year's median sale price. Last week and this week, we've actually closed our sales at a lower price than we did last year, and you can see the trending is coming down. So does this mean that more homes are closing, or more homes that have sold in that yellow pending bucket, are they selling and negotiating better pricing? We'll know that at the end of the year, but it certainly is a downturn from what we're normally used to here. So the median sale price this past week was 285, and that can give some home buyers out there some confidence as well when they look at mortgage interest rates as they have dropped and hopefully continue to drop here. So overlaying all three of those graphics now, right here is the time period we just looked at. So this goes all the way back to 2016. And the reason I like to show you this one is this is that gap between the median list price. So the prices are listed much higher. We have more inventory at a higher price point all the way through. And that's just standard normal operating procedure. The median price at pending, however, sometimes it does cross over. For example, in late 2019, just prior to COVID hitting, it looked like home buyers were paying a little bit less or buying a little bit lower price point of homes, and kind of getting into that home median sale price. But again, then we get beyond that, and we're still seeing kind of that same gap there, this little gap right through here, all the way through. So this just kind of gives you the idea. This is what they're asking. This is where the homes are going under contract at. And then this is where they're actually closing at. So this is that typical, that spread there. So I like this graphic for that perspective. So, all right, last category, interest rates. Well, of course, we're going to talk about mortgage rates this week. Big news coming down the line here. We'll talk about the Federal Reserve here in a second, but let's look at this year over year over year over year. 1, 2, 3, 4. Year over year times 4. Going back to 2020, the red line, dark red line here is 2024, and clearly we're seeing a downward trend ever since the second quarter began. We're down quite a ways. We're also seeing more activity, I think, because of that. Although it's going to be important, you kind of, when I get into the Federal Reserve, and we'll come back to this number here in a minute here, but understand that the Federal Reserve has been saying since about June, it sounds like we're going to do some sort of a Federal Reserve rate drop. You know, whether at one time it was a 0.5%, then it was a 0.25%, and now it's kind of back to that 0.25%. But the important thing here is that we're currently at 6.2% on the 30-year fixed rate average mortgage. Now, I know locally everybody sees this and they go, but we can get a rate under 6% right now. You're absolutely correct. This is the 30-year national rate trend by Fannie Mae or by Freddie Mac. And at 6.2% on September 12th, that's very, very close to where we were in um, February of 2023. We were at 6.09% back then. And what's really more important here as we look beyond, as we get close to this third or to this fourth quarter here, is what happens. Does this trending continue to go down? While last year and the year prior to that, that was the point in time where interest rates were rising. If you remember in 2022, that's when rates really started to rise here from in January, we were just over 3%. And then there was that fast rise, a little bit of a lull there as we got toward the middle of the year, but then it picked right back up again. And we saw interest rates really, really skyrocket. That was the most painful year if you were out there being a home buyer. You could have bought a home at 3.25%, and by the end of the year, the rates were upwards of 7%. So that really put a shock to the home buyers out there. Last year, we were more steady. I mean, it was still between that 6 and 7%, but at one point there, second quarter of last year, we started to see mortgage interest rates even rise, and even that last 2 or 3 months, first 2 or 3 months of the fourth quarter there, we really saw those rates rise October, and then we got some nice relief as we got into November and December there. So let's kind of watch these. This is going to be important to watch. Is what happens if we continue to see these mortgage interest rates on a downward trend versus the last couple of years. That's going to do a lot of things, but one of the things it's going to do, it's going to give home buyers more confidence that maybe interest rates aren't going to continue to rise, which kind of is reflected in that National Fannie Mae report I just produced there or shared with you. So as far as buying power, what does this mean? So right now our buying power is the example I use is based on a $2,000 principal and interest payment only. So this does not include taxes, insurance, or mortgage insurance. But if you're funding a mortgage with $2,000 on a 30-year fixed rate mortgage at 6.2%, that would allow you to fund about a $326,500 mortgage today. And if we look back here, that 326,547, you look back, you had to go all the way back to last year in about February when you could have funded that same dollar amount or very close to that same dollar amount, February of 2023. So it's been a long, long time since we've had this kind, home buyers have had this kind of buying power, and it's much, much welcome. So if you're a home buyer out there, right now, if you find the home you want to buy, I would get on it because there's no guarantee that rates are going to continue to drop. And playing the drop game has come back to bite as many, like we saw back in 2022 there. So the last couple of slides here, let's kind of talk about the Federal Reserve. The Federal Reserve is meeting on Wednesday of this week. It is strongly predicted, nothing is guaranteed, but strongly, strongly predicted by them and by other pundits out there saying that we expect a 25%, a quarter of a point Fed rate cut on September 8th. And what does that look like? So if I overlaid what that would look like here. So there's where we are currently at, where the rate is currently 5.5% for the Federal Reserve borrowing rate. And if it drops it down to 5.25%, the talk out there on the streets right now is that we're going to see this 0.25% interest rate drop next week or this week. And then sometime in November and then in December, we'll see another quarter of a point drop. So that's kind of where this little stair stepping down is going. I think it's probably on their minds to not do something drastic or to also not make a rate cut every month because they want to kind of step back and see what does this rate cut do for the overall economy because uh, yeah, there's a lot of factors in the market right now that are inflation. That's the word I was trying to think of. Inflation has kind of reared its head again a little bit, and I think that's kind of one of the reasons why they're for sure saying right now, as for sure as they can get, that a quarter of a point is out there, and then forecasting that, hey, you know what? We're going to watch this for 60 days and then probably do it again in November and December, but in a quarter% increments. So those are kind of the predictions there. So the big question out there is, well, gosh, if they drop the Federal Reserve rate, now we all understand that mortgage interest rates are not directly affected by the Federal Reserve rate, but they do tend to follow. The question is if they do drop the rates, in fact, they drop it by even 3/4 by the end of the year, will that encourage mortgage interest rates to drop even more? And a lot of the talk out there, and I should bring a mortgage lender on here to talk about this here in a week or two, um, is that rates are probably not going to fall as a result of the Federal Reserve. Because if you remember, I said earlier when we were looking at mortgage rates coming down slowly, a lot of the talk here was that these rates cuts were going to happen, and it has kind of all basically been baked in or priced in. So what we're seeing here is that talk about Federal Reserve price decreases. In fact, I'm going to have to change my title here. It's not no longer going to be a Federal Reserve rate increase. It's going to be increases and decreases. I just noticed that. Um, well, we'll wait until we make sure they do it before I change my graphic here. But anyway, that's kind of the story here. That story was from Business Insider saying that they're not sure it's going to cause the prices to come or interest rates to come down. Interest rates are going to come down basically on their own. It's at this point is what I feel. So, all right, guys, that is the show this week. I appreciate all the comments you made last week. It was great conversations. I probably had more talks with agents out there and questions about the show that I've had in many weeks. So do me a favor, if you enjoy the content, you find it is valuable, please, please, please hit that subscribe button, and then also share the video out there. And then if you do subscribe, be sure to hit that notification bell, because as you'll find out soon, if you're a subscriber, it's Sunday afternoon. In just a little bit, you're going to get a notice that, hey, I've just uploaded the latest show today. So you'll be the first to see this. And I like to kind of watch the viewers. I have a nice little bump every Sunday when I see all these viewers coming on and watching the show. It's last week I know it was going to be a big one because we had a whole bunch of people watching the show on Sunday of last week. So hopefully it'll happen again this week. So anyway, thanks again for watching every week, and we will see you all again next week for week 38. This is Les Solgrove with Des Moines Market Values. All the graphics are available at DesMoinesMarketValues.com, as well as all the previous videos. So we'll see you all again next week. Have a great week.